Hey, man.
Hey, buddy.
How are you?
You're good.
Doing all right.
Good. Differently.
You being a more educated buyer is not something any vendor should be scared of if they've got quality product.
The good ones.
Right.
I think all banding together and getting more data and education in the hands of bankers, I think that's going to flush out the good vendors, the good products. That's my hope. I think they're going to respond really well to it.
If it don't, I'm pretty sure you will.
I have a tendency to not pull a lot of punches if everybody hadn't noticed. All right,
It's
man.
time. You know, it's needed in
It
our
is.
industry, and it's right now. This is it, guys. If you do the math, I'm going to just say this one time right now. If you're upset because your vendor has got a nasty buyout clause, go to hell. You shouldn't be talking to me about selling your bank, and you shouldn't be talking about buying another bank. That's just not what we're about. We want to see grow in this industry. All right. Secondly, if you were that vendor and you sign a 10-year contract right now, half this industry is gone if we stay on the path we're at. What kind of businessman would they be if they didn't have things like that?
He always says
And
we're
this is
doing
a-
it to ourselves.
And that's what I'm just about to say. We're doing this to ourselves. We're not failing. We're literally killing ourselves. And all because we think if we got bigger scale, then we can compete with Bank of America.
If I was $1 billion bank, I could compete with JP Morgan.
It isn't the answer. All it does is make the competition much easier to kill when you're a multi-trillion-dollar bank.
Mhm.
Now, we found a way that can take business away from them. And
Let's
the
partner
way-
with it.
Well, the fintechs are what the big CEOs at the big four banks are scared to death of, and they're scared that you're going to get it.
I agree.
And we're going to put it right in your friggin' hands.
I love it.
Yeah. Yeah. Absolutely. You know, we've been looking at both paths. You know, sponsor bank versus direct bank, and you know, we're a $170 million bank in Sweetwater, Texas. We have 28 employees. You start to educate yourself on the sponsor bank aspect, and you see the complexity, and you see how quickly things can grow, and how quickly you may want to pull the reins on that fintech growth. It's exciting, but it's intimidating. But then you've got this direct bank opportunity where, you know, it's not any different than opening another branch. It's a digital branch. You've got to employ some different technology, which, you know, can be a little bit of a burden. But as we said earlier, is it any more burden than adding another branch location in a market, you know, whatever, 20 miles, 50 miles from your home location, and bringing on the staff that it requires to operate that branch? You're talking about a multi-million-dollar initial investment for a branch, plus a minimum of $500,000 in operating overhead. When you can look at the direct digital bank or a digital branch, whatever your favorite term is, and think about a $100,000 initial investment and overhead that grows with you over time. Yeah, you may have a minimum charge that you need to pay monthly to have that core running, but you'll quickly get to that equilibrium state, and then it's going to grow incrementally as you add customers, as opposed to hiring a staff of 10 and having that cost immediately. It makes all the sense in the world to me. And you guys, you know, thank you for kind of putting us on that track and opening our eyes.
I am 1,000% convinced that community banks can embrace and take on technology, particularly fintechs, at a pace that it's not something the big banks are built to do.
So the old story of small organizations being more nimble.
Yeah, but more so from the technology standpoint of, hey, we've got our core and we do this right here. What was really critical for me, and it took me 2.5 years, guys. I want you to pick up the phone one day, call Fiserv, and ask them to change their pricing model, or FIS or Jack or anybody else. It's like, who in the hell are you and what are you talking about? Why would I want to do that? And so you have to make a math case of showing, you know, pure data based on earnings and all these different earning categories. And it's like, number one, every time there's going to be sponsor banks.
Mm-hmm.
Number two, every time there's going to be direct banks. when they start saying, I get it, this is where the money's going and this is where the profitability of banking lies. And they get the fact that this is not a game that big banks can play, and it is the only path that FinTech can follow because they need a chartered institution behind them. Equals opportunity. Okay. Now all of a sudden everybody got into this game going, well, hell, we can make a lot of money off these little banks. And it's like, and the best part is if you can do it for not charging them a lot of money, you'll make the money on the back end through the transactions.
Love it.
So I need you to create a new pricing model for this as well. And it's like, hold the phone. You want me to set up, what's this thing, the sidecar thing you're talking about? I'm like, sidecar core is what we're going to call it. And it'll probably be called that by everybody at some point. What it is a way that you can keep your existing core and set up another core. Now, why would a bank want to do that, right? All right, there are what I would call payment cores, Galileo. You've got other, I don't want to name everybody's name in the business right now and give them all this free advertising, but there's a lot of cores out there right now that they're not built to do a core conversion off of, Jack Silver Lake or something like that. They're just built to run on the side to operate FinTech with. That's their purpose.
And they do a good job at it.
And they do a damn good job at it, but they're built to set up this face out to all of the FinTechs, and then they face over here to your core.
Reconciliation.
Just doing FBO. That's simplified. Now, the problem with some of these
when it comes to direct banks
is your regulator goes,
right.
So you got all these, you put in 30,000 new accounts this month, but did we do KYC properly?
Right.
All right. Well, it didn't take us
AML,
very long to
BSA.
see that, man, this is a core game. A real
You
core.
need a real bank core to properly play on the direct bank side.
Right. And so rather than create what we call a skinny core, what you need is a fully compliant sidecar core. If you can get the cores, the big guys that have the fully compliant cores to set up and play at this game without charging the banks a lot of money and making the money back on the backside of this thing when there are bigger, higher transactions that, hey, that's a good win for everybody.
And I listened to a podcast, an ICBA podcast, and they had Eric Spink from Coastal Community Bank in Washington on there. And he made a comment in there that he runs 8 different cores. And I thought that was just the most absurd thing that I'd ever heard. And I didn't believe it at first. And so I made a comment on it. And within 24 hours, I was on the phone with Eric asking him about these 8 cores. And he essentially said what you guys were just talking about, and that the cores are kind of finding their niche and serving these FinTechs. And basically what they do is when they vet a FinTech, they find out if they're going to do business with them, they determine, okay, what core do you want to work with, FinTech? And if it's not one that we already have, then we'll get set up and accommodate you, because the FinTech has done research for which core serves them best. And I thought that was a pretty interesting approach.
This is something I think that we really keyed into years ago. And I'll tell you, we had a bunch of internal conversation. I told him for years, I'm like, I can't even say this shit out loud because everybody will think I'm crazy, right? It's so against the narrative. But I believe for a long time, the FinTech space is so unfamiliar with banking technology. They're building everything from scratch and screwing it up. And it's stuff that we in this industry did 30 or 40 years ago, right? We've already worked out the kinks, right? To your point of things like account opening, think about item processing, guys. I think we all know we need to check 21 compliant image, right? And on their side, they're like, oh, we got in trouble. It's a shocker. So they're rebuilding the infrastructure that already exists. That's been interesting from the core side because they're running their own system of record a lot of times or let's just call it GL for the conversation. They're running that's homegrown or some odd thing at the FinTech
Or a Galileo.
or a Galileo payment score, trying to make those things reconcile with the bank core. And it's just like,
Yeah, we did this backwards. And
we
really
should have. That's what we're doing now, right? You should take the bank cores to the FinTech, right?
Yeah.
That's how it should work.
The FinTechs need to write to a compliant core. And when you go in front of the board and you go, look, guys, it's fully compliant. It works just like our core today. Well, all right. I can take, all right. We got that out of the
And we
way.
can all breathe.
All right. that is a different conversation than what's being had today with these, let's go with this extensive layer of APIs. We've got all these different things here. Again, Coastal, and hats off to you guys for getting as far as you have. I think now you could tell somebody, this is the core I'd like you to write to. And they would probably write to it because there's 1,000, I think he said, that they're going to pick 24 from.
Sure.
In that same interview you're discussing.
I believe if you can put together the right stack, you can go and play on the direct bank side, right? And learn a lot there. And it's a good way to take first steps. And I think it puts you in a position to be FinTech ready and play the sponsor bank game. It's a hop, skip, and a jump from there if you do it right. But what we're seeing that's very scary, we're seeing a lot of people employ technology with only the direct bank theme in mind, and they're trapping themselves, or only a sponsor bank theme in mind and also trapping themselves. Most of the technology that we're working out there, I don't think is dual purpose, right? And I think that's something I know is on Mike's mind, right? Would love a byproduct where, hey, we're going down a direct bank path, but obviously having and thinking about the FinTech sponsor bank path as well. That's a part that really grabs me of, man, if I could buy one, get one free.
Right. Well, this is when it's cool when the bankers will actually come early in the process and we can kind of explain some of these things, that there is a path that's both. And that's exactly the path you chose.
Mm-hmm. Talking to our existing core and telling them what we want to do, they can do it for less, but it's not going to be as nice. The other vendor that we're visiting with, they're ready. This is what they are built to do. They've been in business for a long time, but they see the benefit of the direct digital bank, and they see how it can improve their business and how it can improve the community bank industry, and they want to be a part of saving banks, not gobbling banks up. And
you're welcome.
That's key to us. That is key to us. I think I shared with you guys that, we're trying to come out with a personal line of credit is kind of our hallmark product, our initial product in this journey. And talking to our existing core, there were some things about it that they were having trouble wrapping their minds around. How are we going to do that? And we asked, and finally, it's like they went to the back of the warehouse and they reached beyond all the widgets and trinkets there on the front of the shelf, and they pulled out this widget and they blew the dust off and they said, here, this will work. We think this will work for you. But okay, maybe it will work, but how quickly will we outgrow that, or how quickly will technology change that widget is no longer satisfactory, and it's not something that they've updated in 10 years, and it's not anything that they're going to update next month, not for $170 million Texas National Bank.
And again, when you talk to the board and you look at people and go, well, there's potential risk of this or that. Well, okay, here's the deal. Let's look at pure data on what the top earning institutions look like. I'm not talking about top size. I'm talking about money, ROA, yield on earning assets, net interest margin, fee. Oh my Lord, the money that can be made. And we talked earlier today with some guys from MBKC, and we're talking about that. I remember the first time I ever met Brian Unruh. He was, CEO over there, and he was saying that, we have no fees, no overdraft, no nothing. And everybody's like, well, that was back in the days when you hardly ever heard anything like that. Well, why? Because he was making so damn much money off FinTech. He didn't need to do that anymore. And it made it even more appealing to go that direction. So we need to rethink our honey holes in banking, but rethinking those opportunities and how to address them a better way. And when you look at all the data and all the math, it's pretty easy to see that, gosh, these guys are 1%, these guys are 1%. Well, what the hell are they doing? And when you begin to start breaking that
direct
down,
bank and sponsor bank.
Exactly.
But we feel confident that we can start this journey with the staff we have on hand. We're going to have to dedicate a couple of folks to managing the direct bank until we get to a certain size that it makes sense to bring more folks into the fold. But we're not amping up our staff to do this. And I think that's what's important for other banks like ours to hear is that, you don't have to sell the bank.
Yeah.
You don't have to do a merger of equals. There are other opportunities out there.
A lot of money to be made.
Yeah, absolutely. Absolutely. And the feeling out of our boardroom is it's worth a shot.
That's what I wanted to ask you. Thinking about, we were laughing the other day, me and him and Steve from our team, we were laughing that we were trying to count the thousands of community banks that we thought we'd all been to in our lives. It was pretty funny. But I'm thinking about just gazillions of conversations, and I've dealt with a lot of products that are very strategic things, AKA expensive, right? And so I've been a part of a lot of conversations with banks. It's like, man, if we screw this up, we die, it's terrifying,
Yeah.
And I get the sense, Mike, from your perspective and talking about it, you were trying to find that line that maybe this is top of our list on the discretionary budget, right? This is a certain level of risk that would be something you'd choke a little bit if you blew yourself up, right? But it's survivable if not. I thought that was really important. It's the coolest, it's the biggest upside, but the downside isn't blow up the bank.
Do you remember in that podcast that you mentioned, this is one of the things I get from bankers a lot is if we launch a direct bank, how are we going to find the fintechs? I'm like, don't worry. It's like finding mosquitoes at the beach. They're going to find you.
Yeah, they will.
And we'll help you. Don't worry. But he has, over 1,000 to try to pick 24 from, and he has 2 full-time equivalent employees just trying to vet that.
Yeah.
Now, which one's the greatest of all these ridiculously great opportunities that we have?
I love it. And
the point is, well, you have to pick one, pick 5.
Yep.
Because it's their business. It's not your business. You're just facilitating the transaction.
And you said a key word there, which was business. I think we need to stop looking at this fintech and sponsoring fintechs as some crazy complicated thing. It's a business client. It's a business customer. And they're basically a marketing firm. And what they want to do is extend your bank's features to their customer base.
Under their brand.
And be kind of like your marketing firm for free.
And give you lots of
pay
money.
you to be your marketing firm. It's kind of man.
Yeah, that's absolutely right. I mean, that's one of the things that we're gonna one of the biggest hurdles we'll have is conquering that marketing aspect, because that's not something that we're good with. If you had
a
fintech, they're gonna spend the millions of dollars, tens of millions of dollars per year marketing it. But that's also where you blow up and the complexity comes, and some other headaches may come along with it, where the approach that we're taking, kind of tiptoeing into the process. Okay, we'll have to figure out the marketing aspect, because we're going to have that upfront investment. We're going to have some minimum overhead. We need to get to a certain number of accounts for it to be break even. And how are we going to get those accounts onboarded in a timely manner, so that we're not bleeding red any longer than we want to. But again, that's a risk we're willing to take. It's not going to sink the bank if we fail. I tell you, we'll learn a hell of a lot in the process. And if this doesn't work, then we'll take what we've learned and shift and try something different.
There is not enough gratitude in the world for us to give to you and what you do in your community and what you guys continue to try to do. And the fact that you've stepped out of your comfort zone to try to do some things and embrace what we're trying to help all the other bankers do here is exactly what this is about.
The feeling is mutual, guys. Y'all are our heroes, because we were resigned. I mean, we had this idea, this affinity group that we want to serve, and we were down this path. And with every step with our existing core, it's like, well, we can't do that, we can't do that, we can't do that. So we thought maybe we'll just open a website under a different banner, and it'll still be Texas National Bank. And it was a conversation with Christopher where he said, you got to talk to Dave and Tanner. Don't go down that path yet. And man, it's made a world of difference. It'll be a little bit more expensive, but again, it's worth a shot. And like you said, if we can do it, anybody can do it.
But have you already figured out in your journey going, dang, I wish I had some of these decisions to do over, maybe do them differently?
Oh yeah. Yeah. We went with our core providers online and mobile platform a couple years ago. And, we're stuck with it for the foreseeable future. And, it works fine. But when you consider the pace of change and some of these FinTech features that we're talking about,
Got a lot of course.
my inbox is not flooded with updates, update announcements from that provider as to what new features they're going to be bringing. So yeah, if we could do it over again, we'd take a good hard look at it differently.
Mike, appreciate it, man. Thanks for hanging with us.
It was a pleasure. Thank you all for the invitation. Look forward to future episodes.